Hello traders, and welcome to this trade secret tutorial on the symmetrical triangle. So what is a symmetrical triangle? Well, essentially it's a chart pattern setup that can be found in any market and any time frame, and it's a continuation pattern of sorts and reflects a consolidation in price. So we can see that we have a move up here and we form essentially lower highs and higher lows. So high, lower high, lower high, low, higher low, higher low, and price is constricting into the corner of this triangle, a bit like a tube of toothpaste here. It's essentially a period of indecision while the market works out what it's doing and gathers its energy for the next move. So having identified the triangle, how do we actually set our entry and stop loss for this pattern? Well, the entry is just above the triangle or one of the triangle sides, so this might be a swing high that we're looking to break if it's within reasonable distance, but essentially we want to be clear of the line that we can draw to make the triangle. The stop loss goes on the other side of the triangle, so that's our reason where we want to be out of the trade should it go against us, and we're looking to go long in this instance. Because it's a continuation pattern, we want to go with the trend. Trades are always stronger no matter what strategy or pattern you're taking if you trade with the trend. So the trade itself, we break through our entry point, we go long, and hopefully we get a fairly explosive move out of that consolidation area. Now, in terms of excellence, well, really try not to be overextended from your moving averages. There's a separate tutorial on this, but essentially if we've got price near our moving averages, now it depends on which ones you use, I tend to use the 20 and the 50, then we've got full extension to get that explosive move. If the triangle forms way away from moving averages, then obviously it's going to be fighting out that extension to make the move. So here's an example for Standard Chartered, a particularly good example that was from last year. We can see that we've got our triangle forming, so lower highs here, and we've got our higher lows forming a very clear triangle. Moving averages close by, satisfying our overextension, and bang, we get a very explosive breakout. So how do we set our entry at just above what I guess that's about £10, our stop loss around about the £9 region? That's that's a good 3% run we could have had out of that particular trade. It actually goes on to form another symmetrical triangle we can see here, and notice that this one breaks short. It never really makes quite the gains that particular triangle did. So that's always go with the trend. The trend was up, it wasn't down, and that didn't really work. And let me tell you that price, though it's not on this chart, did move significantly higher after that period. So symmetrical triangle, in summary, it's a continuation pattern. It's found in all markets and time frames. Always best to take in the direction of the dominant trend. It is a continuation pattern. Enter on the break of the triangle, so we want to smash through a clear line in the triangle, err on the side of caution if need be, and watch for overextension from moving averages. Okay, thanks very much.